The financial recession has had a few really major impacts on uh, the financial space as a whole, but in particular in the credit card processing space, because most of the clients that accept credit cards as a form of payment fall in the B2C side, so restaurants, retail. There's been some pretty significant losses, which have also driven credit card processors to really tighten down around underwriting and risk. So for new customers, what that means is it may take a couple more days if you're setting up a new merchant account or new credit card processing account to get up and running. It also might mean that they're going to ask for a couple additional pieces of information. So at Caliber, what we're seeing with the clients that we're bringing on is that it means that they're doing a little bit more due diligence around kind of the current financial state of the company or organization. That can look like getting more current audited balance sheets or financials. It also might mean that they're asking for tax returns, really just to make sure that the company is in a stable position. For existing clients in the credit card processing space, Caliber's seeing risk and underwriting, again, looking back to make sure that the companies are still in a strong financial space. So that can look like reaching out to get updated bank statements to see the liquid cash on hand. It may be a little bit more scrutiny around the transactions that are being processed, potentially asking for copies of an invoice or contacts of a cardholder to make sure that the payment's authorized. Caliber's been able to mitigate the impact for a lot of its clients simply because we did a little bit more stringent underwriting on the front end, which simplifies the ongoing relationship. The financial recession that we're currently experiencing has also had impacts on the larger financial services industry. One of the bigger impacts is really around the lending and credit facilities that most banks and financial institutions have inside. And what does that impact look like for most customers? It means that the existing lines of credit that customers have may be lowered. It could mean that new lines of credits or loans take longer to get underwritten or approved, or you may not have access to that altogether. The knock-on effect for us in the credit card processing space is while banks are constricting lending, they also are issuing more credit cards to B2B businesses. So people in the manufacturing, distribution, and professional services space. Instead of lending to them, they offer them a credit card. So that has a knock-on and direct impact for us at Caliber because we work with a lot of B2B businesses, and they're beginning to see an increase in requests to pay by credit card. So it's all that more important for organizations to have options for credit card payments and digital payment options in their accounts receivables. One of the benefits of having been in the credit card and payments industry for the last 13 years is, we've seen this all before. The financial recession that we're currently experiencing in some ways very closely mirrors some of the impacts we saw back in 08-09. And the increase in credit card issuing, the constriction in credit facilities and lending. So it kind of matches a pattern that tends to repeat at least once a decade. Some things that I can share with you from the experience that I have experiencing the financial recession of 08-09 is a couple things. Number one, innovation and iteration are going to be your friend. The quicker companies innovate and iterate, the more likely they are to be healthy on the other side of the recession. The other piece is, digital payments, integrated solutions, and all those things are going to gain market share. So I think it's important for a lot of companies to be open, number one, to change, but also be looking for resources and subject matter expertise around areas that maybe they don't have a lot of internal knowledge around. That can be in the financial services space around the technology that is used to manage AR and AP. It can be in the human capital space around payroll and accounting, or around payroll and human resources pieces. So it's important just to keep your eyes up. And what we saw in 0809 is that the companies that were open to change, eager to make change, eager to innovate, were the ones that came out on top. And so there's definitely an opportunity for organizations. We're already seeing organizations begin to grow because of some of the pivots they made in 2020.